What's up, everybody? Back with another market recap. Today we're going to go over some trades we took on ES. We'll go over gold and oil and go over the thought process of the entry that we took, the reason why we took the trade, go over what we went over yesterday, and yeah, just another market breakdown. We'll go over what the market's going to do tomorrow, or what we anticipate the market to do tomorrow. Go over news real quick, which tomorrow we do have. Tomorrow's Wednesday. We have CPI news at 8:30 a.m. Eastern time. That's going to be a big mover for the market. So tomorrow's going to be a volatile day. Today we'll go over the 4-hour time frame on ES. Yesterday we talked about being stuck in this level and then coming back to retest this level, which it did beautifully. So we'll go down lower time frame and see exactly what we took. The strategy that I've been putting you guys on has been working to the T. Now, I had some difficulty getting in the market because I got in off of this position here and got stopped out this next candle here, but I was able to take another entry once it broke this orb and continue to go up. Now, the reason why I took, or what I was saying to take long positions was, we had this rejection here. So after, this was at what, 9? This was at 10 a.m. This bearish candle down to the downside, I'm sorry, and I got in after this candle was formed bullish again. I was anticipating it to break back above this because we had this big push up all morning long. This was just a pullback, retested this level perfectly. I got in on longs after this candle formed. I got stopped out the very next candle, literally by just a couple points. Stopped out here. Took a L, multiple accounts, got back in again after the candle broke these highs for my second position. This one was a fail or a loss. Took a long position here. Boom, take profit was hit there. So what happened? What went wrong? We did everything as planned. So we didn't do anything wrong. The market, it wasn't ready yet. It came down, just stopped us out. It happens a lot. It was like a manipulation move to the downside. We literally got wicked out. That little point of the candles, just a wick, and then the market shot up aggressively right after we got stopped out. It happens a lot. It was probably a big pool of liquidity here that the market was just coming to fill certain orders and then continue to push up. Now, since we manage our risk to reward nicely, we were able to take a small loss, get right back in the game, and continue for another 2.5 RW. So we took a negative 1R and then a 2.5 plus after. So we were positive 1.5% at the end of the day, or 1.5 R, however you want to calculate it. After this candle was formed here, this is another thing I want to go over real quick. Let's just erase all these. I'll draw it back up after. After this candle right here was formed, this is one of my favorite candles to see. Big wick rejection with a bull, like whether it's bullish or bearish, but in this case, bullish move. We're looking for a move up. So you have a big wick to the downside with a candle flipping back to the upside and turning bull. That's a high indication that the market's going to continue in that direction. This is one of my favorite candlestick setups to find. And once I seen that candle form, I went in, and I went in pretty heavy. So not only did I make my 2.5 R, I went up position size because I did see this candle form. It ended up being way more profitable than I would have been otherwise. So I took a $300 loss in the beginning, and I made $1,200 per account after the second trade formed. So once you start to see certain patterns a lot, you could start to go heavy on certain trades or certain positions that you see. And I was able to take advantage of that today, and I went above and beyond. All right, so let's go over, that was ES. We'll go over a market breakdown after, or we'll see anticipate what the market's going to do tomorrow. We'll go over gold real quick. Go back to the 4-hour time frame. Yeah, gold never got a pullback down to this area yet. We were anticipating that the market was going to come down to get some type of pullback to this area, and if it did, we'll take longs to the upside. It's stuck in this consolidation range, so what we could do now is just wait for it to break out of here and here. We'll wait for it to break out of those two spots, and then we'll decide what we want to do after it breaks out of there. If it comes down, we can take shorts. Still a decent move to the downside. Yeah, 234 points is a lot. If it goes to the upside, not so much. Still 100 points is still good, but we need a pullback to then take buys up. That's the real move right there. That's 500 points. That's the big move. Oil is respecting this level a lot. We have multiple rejections off this level. Now it looks like if we could get a break back below here, we broke back below this trend line. If we get a break back below this level, we'll take shorts all the way down. That's a huge swing move. If we have any swing traders out there, take advantage of this move that's coming up. We have the market's been overbought. We have a pullback. There's this key level here, round number. If we could break below this and a rejection of the trend line, there's multiple confluences there to take these shorts to the downside if we could get a break below this area here. All right, let's go back to ES on the 4-hour time frame. We'll do a fresh markup on here. Yeah, we're going to do the same thing we talked about yesterday. We're going to continue taking buys until the market starts to show us that the market's going to reverse and go the other way. So what we could do is wait for some type of pullback or wait for it to reject off of certain levels to continue the buys up. We are starting to get overbought. If you look down here at the RSI, starting to get overbought, so we could anticipate a pullback, and only if it breaks below these levels here or we form some type of structure around here that's starting to break to the downside, then we'll look for sales. But for now, we're still going to continue buys. In order for us to look for sales, I want something like this, some type of structure forming to the downside, breaking lower lows and lower highs, and then we could start to look for shorts, especially if we get a rejection from these levels maybe multiple times like that, saying that we can't break any higher and still making new lows. Then we'll definitely look for shorts on the way down. All right, and for long positions, we would look for something like this. We get a pushback down, maybe retest this key levels here, not make lower lows, but something like this. This would be ideal for more long positions. Don't have to be around this level, but if we could form some type of, this level will be ideal, but it doesn't have to be here. If we start to form some type of structure going back to the upside after a pullback, then we could start looking for long positions. Come back up to the next level, which would be this 53.25. 55.25, sorry. That would be the next level I would look for longs. If we could stay above the area that we're at now. All right, everybody, good luck. We'll check back in tomorrow after CPI. CPI is volatile. Stay away from the market around 8:30. Check back in after 9:30 when the market actually opens. Let the market absorb some of the news that was coming out. And good luck. We'll check back in tomorrow. All right, everybody. Safe trading.